CTM. What's going on, everyone? Hope you're well and doing great as we get ready here to go ahead and put the work in. Make sure that we stay on the right side across markets, making sure we use, of course, TA and macro for fun. Above all, our mechanical strategies to go ahead and compete with the best of the best. Speaking of which, we saw NVIDIA exiting here, its position, taking a 22% profit, which is just its average winning percent profit over here. You see, I'm sorry. Where am I? That's T-Triple-Q. NVIDIA, 22.7% profit. Its average trade on a winning trade, that is 22.89. So right on the average for that NVIDIA trade. We would have liked to push it further. We always want to push it further, but we want to give what the market allows. We are seeing T-Triple-Q right now, the only daily stock that we have currently in a position. Everything else is out on the sidelines. And this is the perfect description of what current market momentum is giving for us. This trade right now, earlier this session, even just 15, 20 minutes ago, pending close, if it were to confirm at the close of today's market session. Right now, it's no longer pending close. So we have to watch this one like NVIDIA yesterday and see whether or not we're able to hold through this morning's turmoil or whether or not we're getting ready here to close and take some profit. T-Triple-Q, though, our worst performer out of all of our stocks, our worst performer, and its average trade is 26.32. So right around its average trade as well. When I say worst performer over here, this is going back to 2020, right? When I talk about the best of the best, Renaissance Technologies, I think it's 64% after fees that they're able to go ahead and the best performing hedge fund in all of the markets. Uncle Warren Buffett, 34% annualized growth return, the best of the best CTM. I think that Michael Saylor, strategy, just posting over there that our strategy is knowing when to be in the market, when out, and on the right side. Strategy continues here to be under pressure. A lot of people not happy currently. I don't know. I'm a believer long term. You all know my own. I've always been skeptical, but I own strategy, MicroStrategy I called it, and it's so far here from a technical standpoint. We were looking at that launch pattern developing, right? We saw that major wave up, finally taking out the low right there, and then working its way up into the launch. And it was a launch that just was not able to go. Taken out, I'm sure there were a lot of stops around this area over here. Taking them out. You still got that nice bit of pocket of support to come into. What is MicroStrategy off? Its all-time high is going to be, I want to look off of this pocket as Bitcoin is drawn down roughly 30% compared to that 9 set. That's that leverage in action right over here. But sure enough, and just the way it is, I mean, the main point here is, first of all, knowing when to be in the market, when out, and on what side. That is priceless because a lot of people have a lot of ideas about what they expect is going to happen. And at the end of the day, nobody knows at any point in time, including us. We were mildly prepared for what could happen this very week in the markets. And we even talked about, what maybe the extent of the duration would be back of this pullback. We talked about things like, for example, how a pullback just into the previous all-time high that we've just taken out would be somewhere around the neighborhood of 7%. That's not even like a legit, pullback on the NASDAQ. Now, if we lose that previous all-time high, that would be a big breakdown. That we have to go ahead and we have to navigate it, And then we also talked about, what our expectations were into the green line, which is, 4% correction. And below that green line, that sets off what would be a sell impulse. that has a high probability of taking us at least in for a retest of the previous high on the NASDAQ. And so far, though, we have the early warning sign, the purple line, and we pierced it today, which was, coming into that a good area to be targeting overnight. And then we pierced it today, but if we close above it, not so bad whatsoever. Not so bad whatsoever. Now, I still think that this looks. I changed the title at the last minute. Originally, the title was going to be is like, we were prepared, but what's next in relation to, okay, so, ahead of, going back to late July, we were looking ahead and we said, well, we're pretty choppy ahead. We expect some flat chop, which means drawdown. And then maybe even by the middle of August, making a higher high. Both those things happened. It just happened. And it just happened as you're looking at, and a lot of people aren't even sure what you're looking at. You're looking at the NASDAQ historicals for each month, with the blue line being the mean, the average of what transpires. And is it right now just a lot of seasonalities being seasonalities? Or is this the beginning of something bigger? And that's why I changed the title to the greatest risk to the macro. So I want to talk about what I believe is the greatest risk to the macro right now. And a lot of people might think that it's the Fed or the Treasury or Trump or something like that. But we're going to talk about that in 1 second. Are we going to see after Jackson Hole? Obviously, lots of uncertainty coming into Jackson Hole, and I mean, most of the time, Jackson Hole is a non-event. It's been used by Bernanke at one time to go ahead and be a platform for policy. Will it be this time? Likely with Powell, likely not. Will Powell push back? Will he use this as an opportunity to push back against the September cut? I don't think so. I mean, a lot of people think that if he does that, markets might come off something drastic, like 15% or so. Just things to be looking at and concerned about. I think this is pretty important, though, setting up and talking about that September cut. Yesterday, it was revealed that the BLS will release their job benchmark revisions September 9th. September 9th is just a week before, well, almost a week. It is, I can't math. Oh, normally I'm so quick. 8 days ahead, a week ahead of the September Fed meeting. They're going to be resetting the March 2025 payroll levels. Last September, when they revised down non-farm payrolls by 818,000, the greatest negative revision since 2009, prompted the Fed to cut 50 basis points. This is crazy. This is crazy talk, so don't pay any attention to it. But that's interesting because, well, what happens if the Fed wants to cut ahead of the election so the incumbent has a greater chance of getting elected? BLS, we need some major, actually we need the most revisions that we've seen in 15 years. Could you go ahead, hook that up, boom, boom, boom. What happens now? What's the play? Does the Fed want to cut? The Fed does not want to cut, and they have a little bit of cover to do so, in so much as that, yeah, inflation's been kicking up and we have not met our target, and the jobs market is, we've had some bad numbers, but it's still holding in there. Can you imagine this isn't a negative revision that comes on September 9th? Could you imagine a world where the BLS comes out with some positive revisions, and then the Fed has, those cuts are marked off the table? I'm painting a picture. I don't know if it's going to happen. I don't have any inside information or anything like that, and I don't even know. Did Trump fire the head of the BLS after he didn't like last month? I don't know what's going to happen over there, but that's just for fun. The important piece is to watch out, for us to watch out for those revisions on September 9th, because that is a data point that is absolutely going to affect the markets. Don't forget, we don't know what's coming. We don't know when the Fed is beginning to cut. you all know my feeling was that even though the market was pricing in pretty substantial odds of a cut for September, I just felt there's a significant amount of data between now and then that this thing could go either way. And it will continue to do so. So I'm not sold on anything. We went from 100% certainty to now 85% certainty that the markets are pricing in a cut in September. We have much more data, including now not only another non-farm payrolls, but then the revisions to March. So keep at it. Did you see it? Did you see this headline from Financial Times? And so I'm reading the headline first, and then I'm going over to, I think this is more appropriate. Investors warn of a new era of fiscal dominance in global markets. I'm glad to just be like touching on it since yesterday came up that going forward we need to build out much more on the significance of fiscal dominance and what it means. And what's going on? Great to see you. Central banks are under growing pressure to keep interest rates artificially low. I thought interest rates have been artificially low for the last since 2008, So now they're under more pressure to keep them low to offset the cost of record government borrowing. The record government borrowing is a significant issue. It's what is causing not just the borrowing, the debt and the borrowing, and then also the interest being paid on that debt. I heard a crazy statistic the other day, just yesterday, about do you remember before the interest on the debt, before it overtook the defense spending, which is massive, $800 billion a year, defense spending United States, when the interest on the debt overtook what was the greatest expense to the debt, that was a major milestone. And then soon after was $1 trillion, because $1 trillion is a really big number. But that debt's growing exponentially. I don't remember exactly the statistic, and I don't know if it's between 2 and 3 years from now, from that time, that the interest expense will be 2 trillion, which is mind-boggling. And then you could just keep doing the math. It will be roughly from that point, obviously, just another few years before it's not only 3 trillion, but then 4 trillion. It's an absolute massive problem. So when we talk about this guy and the United States having an issue where they need to, roll over a bunch of debt and, look, what do you put? I don't see anything wrong with lowering those rates, rolling over the debt, if it's possible to do. We don't know what happens when the Fed lowers rates. By the way, we don't know if that causes long-term rates to go higher like last time, and I probably expect that is going to happen. It's just a really bad situation. But so the pressure to keep interest rates low, this is coming, this is largely obviously the fault here of the governments and their reckless spending, as well as the central banks and their reckless policy. And all of us, and each one of us, we're the ones that have to deal with the aftermath and the consequences of that. This is why we CTM, because you've heard things and like you have 5 years, which is not true. You have more than 5 years. You have 5 years before AI takes over, replaces humanity. No. You have way more than 5 years. Don't feel rushed. Do things right. Don't feel rushed. There's 2 parts to today's session. What's the greatest risk to the macro? And then the other part is making sure that as you can see the beginning signs of uncertainty pop up over here for good reason. I mean, markets since the bottom of April, have been basically shooting the moon. And now all of a sudden, you're seeing, markets come off 5%. People are like, well, that's just the index itself. Palantir has come off significantly. I don't know how much has come off. Let me check with you. I don't know. I have economy. Dork. So we've seen, 25% drop. That a lot of people riding on the Palantir train, that's a wake up call. That's something when people a week ago were checking their portfolios and it's at, significant, higher than it's been because of and then all of a sudden it's a wake up call. People are a little nervous about what's going on. And yeah, we're closing out our Nvidia trade. We just took profit, and for sure we want that to run longer always. But it took what the average profit is for a winning trade. It's just right on time, right on schedule. And the thing is that we don't know what happens next. But you could see right now, and I love seeing it, how CTM stocks have kind of rolled out where we're just holding 1/6 of a total allocation, and that allocation is the teachable Q. And maybe this week it closes out at a very healthy profit and puts us back on during what is a window of uncertainty. The window does not end over here. Again, I've said, well, watch what happens after Jackson Hole. Are the market's going to realize that that was just a lot of hoopla, and is it going to be a bit of a relief rally, where we're trading higher next week than we are right now? Or and that could also be bad. What happens if we don't take out the high? Nvidia earnings and Nvidia earnings. Hold on one second. Let me paint the picture. Let me put all this together. It's all so important. Nvidia's on next Thursday, right? And we would like to see, obviously, price make a higher high. I always get concerned when you get the lower high. I always get concerned. Now, I just want to go back and check because I'm just curious, because often we know Bitcoin peaks with that higher high. Huh. So I just wanted to give it a little bit of a wobble. What happens over here in November 2021? Sure enough, the higher high, right? But that's not. Hold on one second. What am I looking at? That's January 2020. I'm looking at Palantir. I don't want to be looking at Palantir. That's what's throwing me off over here. I want to be looking at the index. And I'm still looking at Palantir. There we go. So 2021, that November high over here. And yeah, it wasn't. Well, yeah, you had the higher high, and that's concerning. But then you did have ultimately the lower high. Anyway, that's really neither here nor there. You could even erase that from the stream if you want. With that's no signal whatsoever. Start of the bear market. A lot of people think this is the start of the bear market. A lot of people. We can talk about that tomorrow. Looking at Bitcoin, seeing maybe it's. Got the seasonalities right now are not just strong here for the equities, but neither for Bitcoin. And September is worse. So our marker here is, listen, our expectations coming into what's happening right now is exactly what's happening. And just because of seasonalities, was it our expectations? That's all. And then and not just seasonalities. Obviously, we've been riding a wave that's pretty high over here. We're towards the top end of the deviation, coming out of a 20% drawdown, coming off of back-to-back 20% plus years. And the second highest deviation, the one that we're stuck with, 1998, same thing. It was also coming off back 20% gains 2 prior years. So to see some type of chop, consolidation, drawdown is just what the expectations were and are, which is different than when it happens. There's a big difference of us being like ahead of time. Oh, and again, this is so important. I don't know what's going to happen next. I could just have different awareness scenarios. And then even when that happens, that doesn't make it easy. That doesn't make it easy. You think it's easy? I mean, today it's a lot easier for CTM holding, seeing their Ethereum trade, which was yesterday under heavy pressure, bouncing back a little bit today. Same thing with Cardano, Bitcoin bull runs, even. I mean, it feels yesterday was getting punched in the face, though. Doesn't feel nice whatsoever, because the way that our minds are wired is whatever the highest print of our unrealized P&L, that's what that's like our base level. So when it goes down from the highest point of unrealized P&L, and as it is, the human mind is wired that, like, for every gain you make on the upside, every loss you make on the long side has twice the impact. So it feels like you're getting really punched in the face over there. Same thing with Nvidia, and you can look at the unrealized gain, and you can say that, okay, we took 22%, but we're pushing 29%, and we always want what is the max, the highest, and that's not how this works at all. But it doesn't mean that there's no mental psychological impact. There is. So that you have to be, like, aware of it and comfortable with it, and just be like, oh well, I just took what the average winning trade was. This seems good. you know Market's a little uncertain right now. Feels good to be out. I don't know what happens next. If that momentum kicks back up, we'll be there. That momentum might not kick back up, though, until we get towards the end of September. And that's what the expectation is. And the expectation is also that, especially on the high flyers, Ethereum, Cardano, especially on those. And I stand by that. The expectation is, by the end of September, or into the end of September, third week of September, there's a good chance that we're trading lower than we are today. And I would like not to see some, look, easy peasy. Don't take out the previous high. No major breakdowns. A little easier to navigate. Is that going to be tested? Maybe. That was a 7% pullback from the high, by the way. And if you look at where we are right now, so I'm going to look at, I don't know how to do this, actually, so I can't do that. Well, I could use the medium. So from the high is 5%. That's only the medium pullback over here is only 3% from here to here. We've pulled back already 4%, so maybe it feels a little bit more than what the mean was. But at the same time, we're also at the top portion of the deviation. And just for a little perspective, one last time over here, you had over here during again that 1998 thing, you had what looks like 8% down to 2%, like a 6% correction, rally up, another 7% correction. It just, nothing seems out of the ordinary to me in this mind. I know we trade Cardano, and I know a lot of people that hold Cardano, which is, I don't think they want to be holding Cardano. And I think that if Cardano rises above, maybe some people are looking to get out at $1, but others too. And maybe alt season comes, is Cardano taking out $3 or something, yeah, I don't think that there's too much new money flowing into Cardano to be hodlers. But I think that a lot of people still hold Cardano, and that's a lot of upside buy pressure, sell pressure, as even if you get into that type of movement where liquidity is ample. And I just want to jump back over here and talk about liquidity being ample, and a lot of people wondering what happens to Bitcoin. I thought it was going to work for me. Maybe this works. We'll just pull it up. All right. We'll just pull it up. So a lot of people wondering what happens to Bitcoin if the Fed cuts. Is that something that's going to be extending out the cycle over here? To be honest, I don't know. That's one of the most difficult things I wrestle with. And when the Fed does cut September, I'm not convinced. Market's pretty convinced as of now. but we'll have to. I need some further time into the week before to have an idea of what's happening. And if they are cutting, are like, were those revisions going to be so massively negative for the job market that it looks like actually we're cutting into a recession? Would that data point alone be enough to signal that it's not just that data, and that data is lagging as consequences in so much as that it could cascade throughout not just the economy but into the housing market, which everything has ramifications upon ramifications. But point being, or is the Fed cutting into normalization? And if so, fire up the rockets. This is going to be extending this cycle out a lot longer. Or does it not matter, in so much as that we just talked about or showed the headline out of the Financial Times, and they're like, they're talking about a new era. It's not a new era. It's happened before. A new era of fiscal dominance. And in an era of fiscal dominance, the monetary policy does not matter as much. What does that mean? Well, the Fed has just undergone its most aggressive hiking cycle. And in that period, you could see that, well, Bitcoin's been trading up that whole time. So how much of effect has the monetary policy had on the markets? So I don't think that, does it play a role? Yes, and even so much as it's one of our parameters. So this over here, and one of the things that is kind of preventing this cycle from continuing to extend out. God bless you, Craig. One of the things that is preventing this cycle from extending out is the monetary policy of the Fed, right? This is the what we have now is restrictive policy with elevated rates. QT is still ongoing. It's not so big, but they're still running QT. And I don't even know, I can't even trust all these numbers we get. They said they're winding it down to 5 trillion. I did the math this morning. Over the last month, it's been 5 billion. It's been 20 billion. So I don't know. It looks like it's definitely diminishing and flatlining, but it's still running. And obviously the yield curve is not only inverted, probably going to get further inverted. So other things that look good, though, is the earnings continue to improve. But what happens going forward now? Are we going to be seeing the tariff tax, taking a hit of companies' margins? That's important to watch out. By the way, as we talked about hard data, the U.S. consumer retail is still in there, still strong. So, we're on the verge of different things that could happen. So monetary policy, it's a factor, but I don't know right now if it's paramount. Now, alt season, I just saw the word alt season, and I'm going to bring up, the PMI, and right now everyone else is spinning. By the way, there are people who think that the market is topping right now Bitcoin, and it could be correct. I don't that's not even remotely my base case, but of course, in hindsight, they could be like, I told you so. I told you that in the second week of August, that's where the market topped. But I imagine every time Bitcoin has a 9% correction, that's those echoes reverberate everywhere. Other people think it's coming into September, October because of the 4-year cycle. And assuming that my base case is correct. By the way, base cases, hold on one second. This is kind of funny. It's not funny, it's good. Someone fact checked me. They were like, 2 potential paths with greater than an 80% probability of playing out. And then I also threw out, the outlier. And the outlier is, 5 to 10% breakdown below trend, and which we would call a black swan. But someone was like, hey, Grok, what are your thoughts on those scenarios? and the probability percentages. And Grok's like, hey, that's interesting analysis. And he said, with Bitcoin at 116 today, $1,000 amid macro dips, the steady grind path, number one, aligns with institutional trends, ETFs, and it makes the 65% reasonable. The blow off to 500K or higher hinges on unlikely near-term events like Grok. Is he sourcing me here? I don't know. I don't. Bitcoin Act passage, an adoption event. As I put, the only way that's happening is with an adoption event, and still in early stages. He'd give that a 20 to 25% chance, and then the tail risks 10 to 15, given the volatility. Grok here, I had 10 to 15 for the tail risks. I had 5 to 10. So actually, it's 10 to 15 sounds more appropriate. I like that. That's good. That makes a lot of sense. And then, I had 30 to 5% probability of that occurring. Actually, like Grok's better here of 20 to 25%. But you add them together, I said 80% of path 1 and 2 occurring either, and 20 plus 60 is 80, and he puts another 5%, another plus on the probability to the upside. So that, I mean, I stand strongly that this is the probability of the paths ahead. Plan B's stock to flow, by the way, was initiated before the advent of all of the altcoins. And I don't think that he had the foresight to see that a multitude of altcoins were going to be launched. And they eat away at Bitcoin's market cap. Now, if Bitcoin is the apex predator, it doesn't matter. And in the end, it's going to eat all of that. But there's no doubt that altcoins and the fun, like you could see it with simple things like this, like go back to 2020, 21, Bitcoin miners come into 2024, and a lot of money that would have been speculated in Bitcoin miners was now being speculated in Bitcoin treasury companies. Fast forward 2025, Ethereum treasury companies, a lot of speculation happening in there. Is that coming out of Bitcoin treasuries because people think that, hey, I'm a speculator, I think there's greater opportunity here. If the Bitcoin miners weren't around, would have a lot more money have flowed into altcoins at that particular point in time. And if altcoins weren't around, would a lot more money have flown into Bitcoin? I think so. But is it a flaw in the analysis? Yes, no question about it. But I think that he was thinking that this was a Bitcoin only world. We're looking at, but people, not yet, because this is why I jumped over to the probabilities of these things occurring. If one of these things occur, and an 80% chance is very strong. It's not a given, but it's very strong. It's a high percentage. And if one of those were to occur, once people start realizing, assuming this happens, people have to realize that, well, the 4-year cycle was just not it. Now, a lot of people realize that well before the 2024 halving. And it's simple, like obviously the dynamics of the miners halving played a significantly more paramount role in Bitcoin and its supply and demand nature going back to earlier cycles. And in this present cycle, it was adoption that is paramount, and the halving of the miners where it plays such a small role. Nevertheless, if people assume that the 4-year cycle event is broken, they're going to be looking about, well, what is it then? Is it the Fed and its interest rates? Is it the PMI? They're going to be looking for some type of like rationalization in order for it to make sense, because a lot of people right now, that's on the 4-year cycle. And we have the PMI. We talked about the PMI, and look, the majority of this time here, it's the PMI is in contraction. It's under 50. And Bitcoin began a bull run, and that bull run's been going on 2.5 years. I don't think it's the PMI. What about the one good use of this tool is when it's trading above 56, that's signaling that the economy is running hot. And that's when you're going to see not only Bitcoin running, and you're also going to see at that particular point in time, you're going to see altcoins getting ready to do their thing. And as the PMI gets even elevated towards 60 here, that's when alt season occurs. It makes sense. The economy is running at its strongest. That's when there's time for and that's when speculation's taking place. So that's the only use I see of the PMI. I think it's a good one. I think that plays a good role. But hey, what happens if they're able to pull off the impossible? And I don't know if it's Powell at this point. Is it Powell that's I don't think Powell's trying to generate a soft landing. I think Powell's trying his hardest as we were looking at the Fed funds and the aggressive rate shock, October 16th. Bitcoin not immune. Was it immune in the end though? And is this a shift that we could visibly see between fiscal dominance and monetary policy taking effect? And yeah, that you can make the case for that. And what happens if the Fed cuts, and because of the pace of the growth that is being trying to be engineered here through tax cuts, through deregulation, what happens if we begin to see this cycle extend out, the PMIs continue, and then finally to extend into expansion, this thing runs hot above 56, that's when Bitcoin is going to go euphoric. Not until then, outside of an adoption event. Boom, 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 boom. My opinion on MicroStrategy is without a question, without a doubt, that it's, there's like, I know that's going back far to 2020, so the returns look ridiculous, but you could look since the year and a half, 2024, and, or you could buy and hold since that's pretty good too. Outperform buy and hold though, right? Give it a little more than a year and a half history. Look at that. Up and to the right though. All right. Hey, if MicroStrategy doesn't correct, then the holders are going to crush it. But yet, no, like the thing is you don't, and you don't know when the bottom is ever, and you don't know when the top is ever. You don't know when the top is in ever, and you don't know when the bottom is ever. And if you knew when the bottom was, and if you knew when the top was, then you could buy and hold that whole way. But if you realize that you could create an edge and follow without emotion a mechanical strategy, that's my thoughts. I think my thoughts on MicroStrategy, it plays a very good role in our equity portfolio, which is built up of tech, TQQQ, NVIDIA, Tesla, triple leverage FANG, and then also spot ETF Bitcoin, because Bitcoin and tech is the way to go, and strategy, a levered play on that. I think strategy plays an important role in our portfolio, but that doesn't mean, that's it. That's what I think about it. And on the positive side of what's been happening with MicroStrategy, I mean, there might be the thought in the near term, people are thinking Saylor's just diluting shareholders, and then the other shareholders are thinking, why I'm gaining more Bitcoin per share, and I believe in Bitcoin, so I'm grateful for it. And like Saylor, I have a long-term vision, and it's just markets being markets, having a tension of different views and ideas. I think Litecoin reminds me a lot of Cardano in a sense, in so much as that there's a lot of people holding a Litecoin that are looking for it to go up so that they could sell. It doesn't play a role in our portfolio. Our portfolio consists of Bitcoin, Ethereum, Cardano, and Solana. Do I think that people holding alts are going to have the opportunity to sell higher? Yeah, I genuinely think that I believe so. Um, anyway, I think that's important to look at the PMI over here. I didn't get to the most important thing. So let me do that. By the way, thanks for being here. Thanks for the thumbs down. I don't know who I give any of this a thumbs down. That's insanity to me, but lots of love to you, and I appreciate. And the hope is that the algorithm will not show you another CTM video. That's our hope, at least. If it does, do not click on it. Give it another thumbs down, and then we could be gone. The reason I say that because fun sessions are fun. This session's important for the two different aspects I laid out, but we have to talk also about what could be right now potentially the greatest risk. It's interesting to me today, though, by the way, to see just look at the tape and see equities pretty heavily in the red. Not just today, though, right? This has been going on here for 6 days in a row, and equities in the red. And why that's happening, to see Bitcoin and crypto so holding on to some strong greens, and then I look down at gold, and gold and silver are also in the green. And what does that say to me? Well, does it point to this? And we've been looking at the run of gold and Bitcoin in unison with each other. Continuing today, signs of it. What's going on with the NASDAQ? Is this just simply seasonalities and momentum, just taking a breather here? Or are there legit and genuine concerns? And as far as lit and genuine concerns, yesterday, and this exacerbated the sell-off, along with MIT putting out a report, which was nothing new, but it's almost like, man, I wonder if these hedge funds take positions and then use all sorts of media resources to set a narrative. Could that be happening? But this is not a report from MIT. This is the Facebook saying that they're looking to downsize their AI division overall. Now, I don't know what that means. Does that mean that they're going to be spending less money on infrastructure? Does that mean they just spent a ton of money on new talent? Like they poached a bunch of talent from OpenAI, all the talent that they likely need, or does the downsizing mean now they're getting ready to get rid of people they no longer need? I think that's what it means personally. I don't know. That's just my own speculation, but eliminating role, which could include eliminating roles or moving employees to other parts of the Facebook. So I think that's what that means. I don't think that this is a sign that Mark is like, you know what? I went all into the AI. We can't get Llama working, even though I just last week spent like a gazillion dollars hiring new talent with salary and bonus. At this point, I'm giving up. That's my read on that, but it's a negative headline. This is coming off of another recent negative headline, and Sam Altman. Is anyone a fan of Sam? Is anyone a fan of Sam, or he just seems like, I don't know. Would you hang out with him on the playground? Um, he's saying that, listen, first of all, he just got a bunch of talent poached from him. That's not good. Second thing is that they're losing money. So Sam wants to go public. He wants to take OpenAI public in order to go ahead and get a liquidity event. And then the other thing that's happening over there, and I'm not saying that like Chat GPT definitely has its uses for sure. Sam believes that we are in an AI bubble. He's not able to become profitable off of the current product, and he think he's realizing, and everyone else is realizing, that this whole AGI reality is not happening, and now they call it like smart intelligence, and tomorrow they call it somewhere else, and at the end it'll go back to what our original assessment is. This is a fantastic tool to make everyone much more productive. Rob. I'm a fan of CTM, which is being cut. Yes, there's always a risk of curve fitting. Not on our strategies though, right? Have the ace, is the template broken? CTM 2.0 has been running since the summer of 2022. That's 3 years. Now, generally when something is overfitted, curve fitting's a bad word if you're into algorithms, in so much as that you want to have your algorithm fitted. And you guys all know what a fan I am of market structure, right? And I showed it to you in the presentation 2 days ago of Bitcoin, and each asset has its own unique characteristic. Why, I have no idea, but they do. And for sure, due to many different factors, there is a unique fitting. So there's the system, and it's foundational for anything that's traded. And then each asset, which has its own unique characteristic, needs to be fitted 100%. Now, overfitting is when you take past data and you line it up so that it works out well, and then what happens as soon as that goes live, it fails. When you're 3 years into forward testing, you can't wonder, is it overfitted anymore? And that's where we're at over there. But it's an important question. Is there a risk of being overfitted? For sure. One of the greatest conversations we had in 2022 was always about this potential, right? Because it was at that point that you didn't have the years of forward testing, forward live testing. And then also when CTM 2.0 was launched, it was the same thing. There was this great hesitation of actually putting it live because we added 3 more variables, and at that point we're going to see overfitting because of it. Curve fitting is an enormous aspect of concern and worry. For us, it was more always a question of, was it poorly fitted or poorly optimized? Because you could have a certain result, and comparing it to what else is out there, it blows it away. So you're like, but was enough work done by the collaboration in order to have the best model? That's why it's taken us a bit here to be able to release, and it's going to come out right on time. But for the V4 is because we wanted to make sure that we had the best optimized models in order to go ahead and do that. Soft landing. So this is the greatest risk, though. The greatest risk is that this is not some negative narratives being shared, that actually the greatest risk is that the AI narrative fails and falls. If that happens, markets are going to be rolling over, right? And this is the greatest risk right now to the markets, coming up at a time when we're getting ready for the put up or shut up. We are talking about margins being potentially eaten away because of the taxes, the tariffs. And when you look at Nvidia, and then Nvidia was just charged a 15% tariff for all chips sold in China. Is it better for Nvidia to be able to sell, like someone goes on Shark Tank, right? And they got a business and they got a product but they have no sales, is it better to give 50% of your company away and then get a few $1 million in sales? Absolutely. Is it better for Nvidia to sell chips to China for them, their business, and take a 15% hit on that? For sure. But how does the street and what percentage of their overall margins does that 15% tariff on product just sold to China, how does that equate overall? That's for those guys, those analysts that on the street. They're going to be able to go ahead and figure out what they want to do and how that all factors in and what they want. This is a concern though going forward, and it might not show up in the next earnings season. I don't think this is not. Nvidia always gives their earnings like weeks after the earnings season, so this is not the next earnings season, and likely it's gonna probably be okay, I imagine. But as we move forward to the next earnings season overall for not just Nvidia but overall, especially tech earnings, last time we saw Microsoft and Meta knocking it out of the park. Alphabet had better earnings. Google, that trend needs to persist and continue. Otherwise, if we begin to see earnings estimates and revisions going down, that's when I would be looking for the end of this bull run to be underway. If you're picking the end of the run right now, you're trying to pick a top. We don't have any. We're still trading above the recent all-time high. Does it? What are you doing and why? It's because you'd like to pick tops. Okay, you're going to get right once in a while, but that's not how this works. We're not here for once in a while. We're here for methodical, calculated, risk managed, and this is how we conquer the markets. So calling the top in Bitcoin, I mean, we saw that Harvard economic professor, Bitcoin's going to $100 before it'll go to 100,000, and here we are. So depower, so I have to think about this in two ways, and the first way is you could say that gold is a risk off asset, and is Bitcoin ever going to act like a risk off asset? And to answer that question, like we'll just first say not at a $2 trillion market cap. When Bitcoin is able to establish the par market cap of gold, it'll be interesting to see whether or not it is acting more like Bitcoin, like gold, in so much that it becomes more of a risk off asset. And as you're seeing signs that the economy is going to be headed towards slowdown, is that when the bid into gold begins? And then when you move towards a clear sign to growth, is that when you see that money comes out of Bitcoin and gold? And then also gold is playing a different role today, though. And in this new era that we are in of fiscal dominance, you are seeing gold playing a very different role than it's played in the most memorable future. And even look at rates. People used to think that, well, gold is interest rate sensitive. And who's going to tell you that during the most aggressive rate hiking cycle in memory that gold was going to enter into a mega bull market? And most people will be dead wrong, but that's not what's happening. And as governments continue to get into record debt and borrowing, a lot of people are saying, I don't like the idea of government bonds, and I like the idea of gold. And will Bitcoin play that type of role at any point in time? It's not yet, I mean, today I think Brazil is discussing the potential. Their lawmakers are on the floor today discussing the potential of holding Bitcoin as a reserve. So there are signs that these things are in motion, and how long it's going to take for that to happen. Well, I imagine 5 years from now we'll have gotten a lot further in obviously the market cap, as well as the amount of uses that are more aligned with gold's uses by institutions and sovereigns and individuals and businesses. And I think it'll begin more acting like it, but we still have uh, a significant rate of adoption that needs to take place, and we're just at the early majority, and that sounds more like, you know, top of late majority behavior, if you were asking me. Yeah. So, everyone, it's a pretty good Wednesday session. I'm glad for it. I'm grateful for you. This time we spent is absolutely invaluable together. Right now, the question is, for sure, it's a question. Nobody knows. Are we seeing just a lot of um, seasonalities being seasonalities? Or is this indeed the sign of what was the implosion of the bubble? Too soon. We're still right now from a technical standpoint. I always say I have to follow the technicals. We don't have a technical breakdown yet in play. First technical breakdown over here will be a break of the close below the green line. And if that happens, that sets up for me a test of the previous all-time high. If that fails and you're trading below it, that's a significant breakdown. And then I expect that the time it's going to take to recover out of it and the duration is going to be longer. Does that change my expectations? By end of September, October, we could be looking for that bottom. That's my base expectation, is that, even though next week could be more of a relief bounce, that, coming in through September, and guys, rightfully so, people are going to be wondering what's going on here. Is the Fed cutting? Why are they cutting? What does it mean? And we got a lot more of. For me, it looks like the historics are being historical right now, but that could change. And right now, we have no technical breakdown. Um, Now we're on the verge of closing above and below the early warning sign that a test to the green is coming. I can envision that. This is an underbelly galore right over here. The resistance, the support, resist. So this would be a major breakdown. Getting back above it though, secondary breakdown. That's the earliest. But all you intraday traders, I'm pretty certain, have been rocking the short side. It's been very clear. It's been as far as markets go, it's been pretty easy. Wait, which I want to answer this. Which of the 0% scenarios? MND, you got to follow up here with some clarity. Oh, 80% scenarios. Got you. I was like, I don't know what you're talking about. So if I had to say, I mean that, but there's a much higher probability that I also saw yesterday. So I saw it yesterday after the thread. I saw an old friend, power law guy, saying, okay, what happens if we get, just a move up, let's call it 150 and or above into the end of the year, and then price comes off, but that's not the end of the bull. And then into next year, into the end of next year, we have another move up. And People are going to start moving the goalposts, I believe. Um, but the greatest probability, and even Grok also agreed, Grok's probabilities I like better than mine, right? Not really. So I gave a 65% probability of the first path. That's what Grok actually gives it as well. The only one that he gave better than mine was he gave the outlier, the tail risk. He gave that a 10 to 15. And that makes sense. It makes much more sense than mine. Um and there's what, an 18% chance of a recession today. I mean, that makes sense. Maybe I was a little off because I went by adding up the first two most probable. And so Grok changes this to 20 to 25. That's which is better as well. Sorry, and where's Grok? Maybe I could do this. So yeah, so Grok gives the adoption event 20 to 25% chance of occurring. No, I don't know if that's true either, in so much as that, look, a lot depends on what happens over the next 12 months. And this time next summer, right ahead of the midterm elections, which way is the economy going? And I don't have any, I don't follow politics like that. I don't know right now which way people are leaning. Um, but if the Republicans do sweep the midterms, then I think that my probability of 30 to 35% is probably correct. And then if they don't, then I think that Grox is definitely more correct at 25%. Sorry, that's such a small nuance, but it's nuance is always important to me. I think that maybe this could be have been a little bit higher for me. I would have been happier with 10 to 15% about things going sideways. But the most probable event is not a Bitcoin adoption event. It's not that. Notice I left this a little empty on purpose, but I don't think that midterm sweep hype on the adoption, hype on that, like we saw in the last November election, major hype out of it. Could that break us out of the sustainable channel? Then a massive 50% correction. It's like a dream, right? And imagine the shakeout. Right after the ETF was launched, very similar event occurred, and people were scared. And we were like, February, price makes a new all-time high. And then it doesn't stop here. If this is happening, then expectations are that we're going wildly up. And you can see it right over here. It's a very similar path here. It doesn't break out here from the sustainable channel. In mine, it does. Come back down, and then it's up, 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 up. That, I mean, is it a 30% chance? Still 30% chance. It's not a small chance, but the most probable event that's going to occur is that we're going to continue walking up. So I have a picture of it. The first one. And does that mean that we don't test in this area? I'm highlighting that whole area over the next 2 years or whatever that is. No, it does not mean that. I'm trying to signify that we stay on the upside and downside within the sustainable channel. We don't break the 13 year 10-year CAGR trend line. It could happen, but it would be different if it did. That's all. Yeah, seeing a lot of calls for the top here all over the place, but let's check back. Let's check back what's going on as we get into November. Wonder Wolf. I've seen it happen before. I've seen people like this call you're making now and it become 100% correct. I've seen it. It could happen again. I would believe it. But for now, and we'll pick this back up tomorrow it's an ongoing conversation each and every day where we break down the macro. We take a look at TA and make sure that we stay on the right side across markets. Iron sharpens iron. Everyone, have a beautiful day. Thanks for being here. God bless you. Look forward to it. See you all later.